And this brings us on to demand lines. This is live cattle futures on a daily time frame. Here we have a classic building of an uptrend with many nuances on this chart that will help us as traders. So let's begin. So from the lows here, so we have 1, 2, 3 touches, and we draw this up from the lows, and this is the correct line to draw as it contains price. It holds and serves as support. However, this isn't straightforward as we're live in front of the markets. This isn't straightforward, and we do need to adjust. Okay, how about this violation down here? Do we draw the line from here? And the answer would be yes, we would, until here. Why? Because the distance, we can see the market try to hold here, or it is holding, and we have a look at the distance between the demand line and the price action, and we're thinking it's not traveling all the way back down to demand line, and demand's emerging. So then we would look to our chart. Are there any better lines? Are there any better lines that we can draw? And there are. We can draw from here to here to here, and then there's a touch here, and if we draw it through, it contains this price. So from that line we get an additional touch, a mild violation, so that's 1, 2, 3, 4 touches, a mild violation which still contains price. It's only a small violation, and then all this area here, for all intents and purposes, this holds. There's 1, 2, 3, 4 times. So price is contained. See, this line up until this point provides clarity. This line from here doesn't really serve any purpose. We rally up, we come back down, boom. Lo and behold, it acts as support. So if this line isn't drawn in from here, if you're new or starting out to draw these lines correctly, you may want to keep both of these in. I wouldn't. But when we see this touch here, and you can find the best fit with the 1, 2, 3, 4, all this touching, 8 touches, mild violation, and another 2 there, you must draw that level in. Good. So we come down, we hold. Good buying off the demand line. Excellent. That's what we want to see. We push up into new highs, we come back down, and we hold. Now there's a big tell that I know this line was correct and this was incorrect, and that is by the gap. Why? This was made from the large players. This is a good example of illustrating the nuance that we need. We must be thinking and trying to find the best fit line at all times. Yes, we do need an artistic license. It isn't straightforward. It's only a mild adjustment, but it's very powerful. Most traders would draw a line from here, and it doesn't serve us. We gain no additional data. When we draw it correctly, we gain trading opportunities. Very, very important. And we gap down over support. If we draw from here, this means nothing. This means nothing. This means nothing. The very nature of a demand line is to show demand, and this does. So if we have an opportunity to move or adjust a line, as we did here, we need to do this. It's in our best interests. So I already spoke about this gap, which is very common in stocks. stocks love to gap over or under important structural areas for a variety of reasons. The main two are they don't want people jumping on board on the move. It catches many traders off guard. They're locked in at a worse price. Stops a hit, etc. So from this observation alone, via the gap, when they gap it over or under structure, we know this level must be important, because it's used as a tool by the large players. They are watching these levels very closely. They know the mass psychology of the market around demand lines and support and resistance lines, and they know what to expect from these areas of structure. Most importantly, they know how to use it against us. I just find it fascinating. This is why we need to use and understand structure correctly. So from the gap we come down and we note this holds here. As we break the highs here, we would draw this line in. 1, 2, 3, 4, 5, 6, 7 touches. We come back down and we hold again. We rally back up and we hold again. So here you get 2 trading opportunities. Think about it, here at this point is valid with multiple touches all over the demand line. We come here, get lovely reversal action, spring and good solid buying from the demand line, exactly what you want to see. Brilliant. Now here we have another important use of structure. When we break the highs here, you would draw this level in. It doesn't really help, but we do know that the momentum is increasing. The force of buying has increased. And this leads to this line. Okay, as we break here, so this high here, we could probably by this bar, would definitely draw this line in. And this line does help us. Why? Well, if you can read this market and apply structure correctly, so we have horizontal resistance. What's this? A spring. And then we rally up. And this simple demand line keeps us in the trade. Don't forget, this is a daily time frame. Look, we push up, push up, push up, push up, push up. Bit of negativity at the highs. Okay, so this simple demand line keeps us in the trade. It's powerful, very powerful stuff. What else is there around here on the chart? There's nothing else to aid us, nothing. But we are looking for this move to end. Why? Because of momentum. It's increasing exponentially. What do I mean by this? Well, B is a lovely 45-degree angle. I think I've spoke about this previously. It's a lovely 45-degree angle. This is what we want to see in trading. This tells us that's good quality buying. Then this C line, well, that doesn't help. We know that momentum has increased. The angle of ascent. This is the simple demand line. So the angle of ascent has increased. So this is B line, this would be C line, and this would be our D line. So just from this structure alone, we don't even need price. We can see that momentum has increased because the angle of ascent by the simple demand lines have risen. And think about what that means. Well, this simple demand line B has been holding for has been holding for 7-8 months to this point here when we break. We think, okay, but we notice it's increasing. And then D, we see increases further. This move is parabolic. We are rising too fast, too soon. Therefore, we know there will be a huge correction. There has to be. The market cannot sustain this kind of buying. Markets, this angle of ascent, this kind of buying, the markets don't shoot up like this. All these bars are extremely good buying. I mean, push up, push up. Look at these spreads compared to all the spreads for the past 8-9 months. They're 80 to 90% larger than all the bars in succession. There's a buying frenzy. Very important information. There's another nuance here. As we break, what's this? Flip side reviews. Flip side reverse use, where it holds as resistance. It holds a bit longer than we expect, but eventually it tanks and we gap down, which is a supply imbalance. No, this is not an axis line. Why is this not an axis line? Because there isn't much trading through it. Axis support here, 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 and then it's resistance. For a axis line, we want support, resistance, resistance, support, support, resistance, 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 support, support, support. We like to see it act multiple times, being both support and resistance. This is a demand line, primarily. Think of the longevity of this for 10 months or October, 1, 2, 3, 4, 5, 6, 7, 10 months. This has been a demand line. Then when it breaks, then it only acts as a flip side of use that offers some resistance. Okay. So the key areas for this study are: ignore this violation, look for the best fit. I mean, this must be drawn in by here. I mean, even here, when you become proficient and you gain confidence in structure in the markets you trade, you will know to draw the your demand line in here. But don't force it. Now I can draw a line through this to hit all this. Don't do that. That's forcing the line, and you're violating too many bars, and this is doing yourself a disservice. It will hurt you in the long run. We want to look for the least amount of violations possible, and of course the most touches. And the other thing on this chart was the momentum from this line to this line to this line. This shows the momentum, or the force behind the buying. We drive up nicely, force increases, boom, we become parabolic. And when we see this occur in the market, regardless of time frame, be careful. 5 minute, 3 minute, 15 minute, a daily, just be very cautious. If you're in position, be very tight with stops. Good. Are there any questions for this chart? I primarily trade stocks, and there's lots of gaps. Is this still applicable? Is structure yes. I primarily trade futures. I do trade stocks, and on softs, or especially grains, there's a lot of gapping. Well, what you can do is, like I said, you can draw in the line. All it is a supply imbalance. Just means, like I said, resting orders come into the open, pushes it down. I do understand there are certain charts or certain instruments that gap all over the place, and to be honest, they do become a bit of a ball ache. I did have an indicator years ago which used to paint in the gaps, but we have now electronic trading. There are thousands of instruments to trade. If you don't like the way it looks, or if there's gaps just everywhere, all over the place, you can't make head nor tail, you don't have to trade it. Find a different vehicle, find a different instrument to trade. I have yet to find an instrument where this methodology doesn't work. It does work better on certain instruments than others, and certain concepts and certain time frames work better than others. For example, I prefer trading gold on a 15-minute time frame, and I like to trade oil on 900 ticks. I like to trade the S&P on 5-minute bars, or occasionally 3-minute bars. It's personal preference. Just find a market that suits you and your style. But don't concern yourself with gaps. Like I said, if it's too gappy, just find a different instrument. There's thousands, tens of thousands out there around the world with all the exchanges. At the very highs, you said you would exit. The only way was price action. Can you can I explain what this move here? How would I exit? And a price action. Oh, this bar. Yes. Well, think about this logically. This is a very, very strong move, as we've noted. The widest spread volume, the widest spread up bars we've seen anywhere on the chart, and they're in succession with momentum increasing. So we're expecting negativity. Bang, push up, positive, push up, positive, push up, positive. Stalls, that isn't negative. Push up, positive, push up, positive. Boom. Yes, we gap up. We do close above this bar, but what do we notice? It's the first bar that is closed on its lows. Now that, if you consider all this here, is a change of character. All these are pushing up. Even this stalling bar is not negative. This is a negative bar. The main way to get out of this, I mean, this may be a bit advanced, and we would need volume, but from price action alone, we can see that's a change of character. But the simple demand line, this here, when we break, we exit. So here you can take partial profits, and here, when we break, we either have to exit. Don't forget, this is soybeans, and if you're in from here, that's thousands, $5,000, $6,000, $7,000 a contract. You want to bank profits, and we know the move is parabolic. We're looking for a reason to, we are aware that the move is parabolic and a correction should occur. Oh yeah, look over here, another lovely opportunity. We know this is supply coming down. Why? It's the largest down wave on the chart. Look at that angle of ascent. Boom. We come down here like that. Here we come straight down. So as we rally back up, we get these three bars. This is a hidden up thrust. Look at the selling. Look at this wide spread bar. You can trade that. Test here, and our target would obviously be the demand line. But I'm getting ahead of myself again. But I hope that answers your question. Very, very good question. Again, we will go over price, the volume, and the price action, about what these bars mean. But the main key is that we have a change of character. I see no further questions. This completes our simple demand and supply line studies. On to the next subsection.